Good evening, everyone. Thank you so much for joining. We're going to get started in 1 minute.
Good evening, everyone. I'm going to go ahead and get us started because I know we have a lot of people who will be joining us and trickling in. But my name is Derek Scott II, and I have the pleasure of serving as your Young Alumni Network President. And I'm so excited to welcome you to our first ever Home Buying 101 webinar in partnership with the Black Alumni Network. This event aims to provide guidance and insight that you may need as you pursue your first and or next home purchase. We're grateful to share the knowledge from our esteemed guests that will be joining us and sharing information today as you consider this home buying journey. Many of you that tuned in today may be members of the Alumni Association, and I thank you for your commitment to the university and to our respective organizations. These impactful resources would not be possible, right, without your commitment to the university. But I do have the great pleasure of introducing a friend before we get into business, Ms. Shari Williams. Shari graduated in 2006 with her Master's in Public Administration from Nova Southeastern University. She's been long involved with the university in several areas, but most recently served as the immediate past president for the Black Alumni Network. In 2020, Shari was one of 4 participants awarded with the Reuben D. Askew Award, which is the highest award bestowed to any young alumni by the Young Alumni Association. So please give a warm virtual welcome to Shari as she gives context on why this event was created and how important it is for us to have home ownership in our communities. Shari, take it away.
Thank you so much. So I think the first reason why I thought we should do this is because I live here in Orlando, Florida, and as I drive, I'm always seeing new construction. And I think about the opportunities and the asset and the family wealth that real estate can create. And there's a lot of news articles that have been put out recently over the last couple of years about minorities acquiring land and real estate, using it as investments, as well as, just women as well, using it as an additional tool. And I thought that it would be great that we provide this as a resource and a jumpstart, of just conversation for minorities, women, young alumni as well, taking advantage of some of the programs and opportunities in the various states that you guys may reside, or you may decide that you want to come back to Florida or Georgia. Florida and Georgia are probably the 2 states that have the largest alumni membership. And so I just wanted to provide a resource for everyone because real estate, as we all see, is very important in our various communities. Thank you, Derek.
Not a problem. Okay, thank you, Shari. So this event, you're used to seeing panel discussions, right? Well, you have 3 or 4 people will ask questions. They'll all go one by one. We want to switch it up and actually have different presenters, right? 3 different presenters, 2 focused on, let's say, real estate, mortgages, brokerages, and then also 1 being a financial advisor, wealth planner, et cetera. So first, I have the great pleasure of introducing Ms. Tamara Combs. Tamara Combs is the co-founder of Combs Premier Realtor Group, which is a real estate brokerage firm in Florida and Georgia. As the founder of the team, Tamara focuses on residential and new construction home sales and purchases throughout the market. With 15 years of experience, Tamara continues to elevate her position in the real estate market and has proven successful in doing so. She's led and partnered with her husband, Mr. Emmett Combs, who is the CEO of Combs Premier Realty Group and mortgage broker with the Market Capital Mortgage. In today's presentation, Tamara will provide valuable insight in the mortgage process, plus a few tips to help our Florida residents stand out in the application process. So without further ado, take us away.
All right, thank you so much for the warm welcome. Good evening, everyone. And again, thank you guys so much for this opportunity and for this time. So as Derek mentioned, I am the co-founder of Combs Premier Realty Group. We are a real estate brokerage focused on the Florida and also the Georgia market. My husband is actually the broker, and we also have a mortgage brokerage company as well, focused specifically here in Florida. To give you guys a little bit of a background about me personally, I actually started investing in real estate literally about 1 year once I had graduated from Florida State. My first investment property was when I was sitting right at the age of 23. So if there's anyone on the call that currently does not have a home that you currently own, or you don't know what direction to take, no matter what age or stage you are in your life, it is possible. I did it at the age of 23, and I kind of used some of my experiences just to help others on their journey as well, because there's a lot of different things that I had learned when I first purchased. And fast forward 13 years later, we have 6 properties as well that we also manage and we've invested in. So I kind of like to educate individuals and provide the knowledge and resources that I have just based on my experiences when I first started purchasing. So a couple things for the sake of tonight's call. What I wanted to do was to take everyone through just my 8-step process of how to get from point A to point B whenever you're looking to purchase a home, okay? So the first thing, whenever you're looking to purchase, now this pertains whether you're a first-time home buyer, you're an investor, or you're just simply looking to purchase for a second time. What you want to do, the first step, is to always speak to a real estate professional. That's going to be the first thing. So what I would always recommend, reach out to a couple individuals who you know are realtors. Do your research on your realtor. Make sure that your realtor understands how to get you, number one, from the pre-approval process to the closing table, because ultimately that's what your goal is going to be. So make sure that you reach out to some real estate professionals, hire your real estate professional, and then trust your real estate professional to get you to the closing table. So that's the first step. The second step, once you hire a real estate professional, is to definitely get pre-approved for a mortgage loan. Now, I know that there's typically a lot of different questions that people have as far as the mortgage process, what that entails, and how you get started. The first thing that you always want to do when trying to apply for a mortgage loan is, of course, to determine what lender is going to be the best lender for you. So do your research on the different lenders that are out there in the market. Also, you want to ensure that you kind of shop around to see what works better for your finances. I'm going to let the financial guys kind of handle that part specifically on the call, but you just want to make sure that they'll be a good fit for you. Today, with the market and the way that things are going in regards to interest rates, there's a lot of opportunity for individuals to take advantage of lower interest rates, but there's other factors that play into that. The one thing that plays into your interest rate, you guys, is going to be your credit score. So you want to make sure that the higher your credit score, the better your interest rate will be whenever you're purchasing a home. That's just rule 101, okay? So once you go ahead and you select your lender, you go ahead and you fill out a mortgage application. There's going to be several documents that the mortgage lender is going to require in order to get you pre-approved for a mortgage loan. So a couple things that'll be needed are going to be your pay stubs. They're going to use your last 2 years of your tax returns. They're also going to be looking at your bank statements to look at how much funds you have in reserves in order to help to pay for your down payment and also for your closing costs. They're also going to be verifying your proof of employment specifically for the last 2 years. And then a rule of thumb, typically whenever you're purchasing a home as a first-time home buyer, if you're looking to do an FHA loan on average, okay, with an FHA loan, you can get pre-approved at a 580 credit score. I would always recommend that you try to get your credit scores as high as possible in order, as I mentioned, to take advantage of the lower interest rates. But typically with an FHA mortgage loan, which is typical for a first-time home buyer, you can get pre-approved with a 580 credit score minimum, okay? But the higher the credit score, the better. So I would always recommend a 600 or better for your credit scores, okay? Now, after you get pre-approved for your mortgage loan and you have been fully pre-approved and you have that pre-approval letter in hand, the next step is going to be to start searching for homes. Now, typically, whenever individuals are looking to purchase a home, I always give my clients and anyone that's looking to purchase the option of whether you would like to buy a resale home or a new construction home. So for the sake of tonight's call, I'm just going to talk specifically about resale homes. If there's anyone that does have question about new construction, I can definitely talk about that as well. But whenever you're looking at your homes, you want to consider several different factors. Number one, your location is very important for when you are purchasing a resale home and or new construction as well. You want to understand and identify whether or not you want, how many bedrooms, how many bathrooms you want, the features you want in your home. And also if schools are important to you as well, then obviously that's going to factor in your search criteria whenever you get pre-approved and whenever you're looking for your home, okay? So once you kind of identify exactly what you're looking for in your home and you have narrowed down after you went house shopping, you've narrowed it down to say, okay, you are interested in submitting an offer on a home. That's where your realtor or your real estate professional can provide you guidance as far as how much you need to put in your offer for on the home and what's going to be in your best benefit in order to, win the bid for the home. In today's market here in Florida, it is homes are in high demand. I'll put it like that. So I always like to be realistic whenever I'm educating individuals on making a home purchase to make sure that you always put your best foot forward whenever you're making an offer on a home, okay? Once you make an offer on a home, after that, there's going to be your negotiation and contracting, okay? And obviously your realtor will walk you through that process as you're going through, the negotiations with the listing agent and also with the seller as well, whenever you're purchasing. Some of the things that I would recommend in regards to making an aggressive offer whenever you're purchasing a home is to, number one, make sure that your contingencies and your time windows are always tight. So you want to ensure that whenever you're submitting your offer and whenever you're negotiating, you're able to ensure that you're a little bit flexible with your timing, for instance, to close on the home. You're a little bit flexible when it comes to getting your inspections done. You're also a little bit flexible as well when it comes to putting down your escrow deposit, not waiting 3 days, but maybe making your escrow deposit in 1 or 2 days at max whenever you go under contract. So those are some things that I always like to inform people in today's market, how to be aggressive and how to get a home, okay? Now, the next step after negotiation and contract is going to be to go under contract. Once you're under contract, there's going to be a ton of timelines that your realtor can give you advice as far as how to meet those timelines in order to get prepared to close, okay? Now, the 7th step is going to be the final details of purchasing the home, which once you get closer to your closing date, you're going to be more in contact with your lender who will be trying to ensure that we meet all the deadlines in order for you to close in time. Okay, so I'm just giving you guys a simple one-on-one on how to get from point A to point B with the closing process, okay? Now, once you have a closing date, you have your clear to close from your lender, The final step is obviously your title company is going to be reaching out to you in order to get you prepared for actual closing day. So closing day is going to be the day, of course, when you're signing all of your documents, you're signing your final HUD settlement. And basically, once you're done, you get the keys to your house, okay? So that's pretty much an 8-step process to get you from point A to point B in the home buying process, okay? All right, so now I don't know if we want to open it up for any questions or, because I feel like I've been talking for a while.
No problem. What we're gonna do is there are some questions that there was one question that was submitted live, and you do have about 6 minutes until we need to get to the next presentation. So I'm actually gonna pitch this live question at you. Someone did ask, and I want to make sure I get her name correct. His or her, Alex Spicer asked, if you have less than 2 years of pay stub, will this affect your pre-approval chances?
If you have less than 2 years, so there are some mortgage options where you can do a bank statement. If that's an option, there are bank statement loans where you can simply have 1 year of bank statements in order to get pre-approved. But typically, if you're doing a regular FHA or conventional, you will be required to have 2 years of income in order to get pre-approved for an FHA or a conventional loan.
Thank you.
And another thing to note as well, typically for any individuals that are looking to purchase but do not want to go the FHA or conventional route. So this is more so for the entrepreneurs, the individuals that aren't typically on a W-2 income. Those are the individuals that'll typically want to do a bank statement loan because it requires less timeline as far as the income, and it's only 1 year that can be used. So it's called a bank statement loan that you can use to purchase a home.
And then we got one more before we move on to our next. And if we don't get to your question, we'll answer it in the Q&A section. The last question for you, Tamara, is can you explain what are escrows? Like, what is an escrow account?
An escrow account? Okay, so your escrow account is basically the funds that you're holding or you're keeping in order to purchase your home. So typically, whenever you purchase a home or whenever you go under contract, no matter what, you're always going to have funds that are in escrow in order. It's like a good faith estimate, basically, to hold that home until you close on it. Right? So typically the rule of thumb, whenever it comes to purchasing, I always recommend clients to navigate and have saved up for every $100,000 of a home purchase that you put $1,000 in that escrow account in order to hold that home until you close. So for instance, if you guys are looking at, I'm just going to throw it out there, a $300,000 home, the escrow account that you're going to have should have about $3,000 in escrow, and that the title company actually holds those escrow funds until you close.
Thank you so much. This has been great. If you don't have it, get your notepad out, get your pen out. We're going to school tonight. Tamara, thank you. We'll bring you back during the Q&A section.
All right, absolutely. Thank you, guys.
All right, so thank you for sharing your expertise with our fellow alum and friends. Now let me introduce our next presenter, Mr. Ephraim Abdullah. Ephraim, the Metro Atlanta Real Estate Expert Advisor, helps families build wealth through home ownership, real estate investing, and debt conversion. He has been in the industry since 2007 when he was framing houses in Tallahassee, Florida. All right. Abdullah moved to Georgia in 2009 where he met and married his wife. He later became a licensed realtor in 2014 and currently resides in Powder Springs, Georgia, where he serves on the Development Authority of Powder Springs as well as at his local mosque and neighborhood HOA board. In today's presentation, Ephraim will provide valuable insight to our Georgia residents on what to expect during the home buying process. So thank you. The floor is yours. Take it away.
Thank you, Derek. I appreciate that warm welcome, and I appreciate y'all having me on tonight. Well, thank y'all for coming out. God bless you and good night. Tamara covered it all. I don't need to present anything now. But
I didn't want to jump too much into your part, so hopefully I didn't say too much.
no. You did an outstanding job. I mean, yeah, you covered everything that they need to know from A to B in the home buying process. So I'll try not to repeat too much of what you said and just try to touch on some other areas. First of all, if you like, you can scan my QR code, get in touch with me. It's my link tree. It's got all my information there of how you can get in contact with me through social media, sign up for email list, and schedule an appointment to do a discovery session if you need to, if you have more questions after the session tonight. But what I wanted to do is just walk through, I guess I'll give you a little bit of a visual of some of what Tamara said. Buying a home, why buy a home first? I'm just assuming that everybody here tonight is either on the path to buying, already has a home, or would like to in the future. And so first of all, let's start off with just why should you buy if you don't have a home already? So number one, buying a home means consistent monthly payments. As we see these days, rents are skyrocketing. Home values are up, which means rents are going to follow suit as someone is paying the mortgage on those properties, and generally pass those bills on to their renters. So as you can see here by the graph, the chart, home rents have been aggressively rising over the decade since 1990. And this is just a national chart here showing from about $400 up to going about $1,200. If you're in a place like Atlanta right now, that medium rent is much more than that. As opposed to renters, homeowners can lock in their set monthly payments for 15 to 30 years. That's a huge, huge advantage that you have. And it provides stability, basically. So you're not moving every year or two when the rent goes up and the landlord increases the rent. You've got your payment locked in and you know what you're going to be paying from year to year. And that gives you the ability to plan, make your financial plan, and make it very secure. So another reason that you want to own a home as opposed to renting is ownership helps build wealth. Real estate ownership has been the foundation of wealth building since the beginning of ownership, basically. Renters basically substantially lower net worth. If you look here, the average for net worth for a renter is about $6,200, and the average household net worth of a homeowner is about $54,900. That is huge. And the main reason is home ownership builds equity. When you're paying those monthly mortgage payments, you are building equity in that home. It's sort of like you can view it like a forced savings, as opposed to rent, where you're just paying for the space to live. And once you paid that, that's it. You don't get any benefit beyond that. When you buy a home, your monthly payments build equity and by extension, your net worth. Reason number 3 to own gives you more flexibility. Renters are limited when it comes to customizing their space, and homeowners can make design changes and upgrades. 63% of people list flexibility to do what they want with their space as a reason to own. That is another one. There's only so much you can do with someone else's property, but when you own your own property, you can, reasonably speaking, do what you want. There are those things called HOAs, or homeowners associations, that don't allow you to paint your house neon green if you wanted to. But other than that, you have a lot more flexibility. So let's talk about the Atlanta market, and then I'll go through a couple of steps. Like I said, Tamara covered a pretty good bit of the buying process, but I'll cover a couple of steps on getting prepared to buy, just give you another visual. So in particular, Atlanta is, a great place to be. Number one, there's a lot of Seminoles here in Atlanta. It is the third fastest growing metro area in the country behind Dallas and Houston. So that means there's a lot of people coming here, and there's a lot, I mean, people from all over are here. Reasons for so much migration to Atlanta, opportunity. There are tons of companies here that are headquartered here. Some of the ones that you may have heard of, I'm pretty sure you might be familiar with a few of them. These are some of the major Fortune 500 companies that have headquarters in the Atlanta metro area. You see Coke, Delta, UPS, and so on. So what this does is attract, when you have companies and you have big business, you attract talent. So talent comes from all over, and talent attracts big business. So it's a big cycle. The Atlanta market right now, as Tamara touched on, the markets in general in Florida and Atlanta are pretty similar. Is very competitive when it comes to buying a home. So what to expect if you're looking to buy in Atlanta right now. One thing you can expect is a lot of competition. Any home you look at, there's going to be 20 other people looking at that same home. So how can you prepare for that situation? And Tamara said it, the first thing you have to do is have a professional. You want to definitely hire a professional real estate agent, someone who knows the market, who does this full time, and they are well versed and well aware of what's going on in the market on a day-to-day basis. What that does is going to allow you to be able to compete when you get in those situations where there's 5, 10, and sometimes even 20 or more other offers on the same home that you're looking to purchase. Along with just knowing the markets, your real estate professional is going to be a great resource. They're going to be able to put together the team. Real estate, your agent is the person who has already developed relationships with the lenders, with the title companies, with the closing attorneys, and so on. So these are things that you won't have to worry about in the process. So when you're able to take your mind off of all those things, all the details of the process, that allows you just to have the time and the energy to focus on what it is that you really want, that you need, and preparing to make the move that you're going to have to make. The home buying process, it is said, is one of the, home buying or selling process, it's said is in the top 5 most stressful life events that you can experience. Now, let that sink in for just a minute. Imagine that the home buying process, period, in any market, in any time period, is a stressful situation. Think about it. It's the biggest financial obligation and purchase that most of us will ever make. And so there's a lot that comes with that. There's a lot of moving parts. Tamara talked about the documentation of forms that you're going to have to get together. There's all types of things with the contracts, with the negotiations, with scheduling, putting together inspections, and all these types of things. So it is a very stressful process if you don't have the right team in place. And number one, that team is your real estate professional, your agent. All right. So let me go over a couple of steps to what you will need to prepare. And that's not the right one. We're going to first step. Tamara talked about knowing your score. Your credit score history plays a role in your future loan. You got to know your scores and how it's going to impact you. The better your score, typically speaking, the better interest rates you're going to get, which means the less money you're going to spend overall in the long run on that home, on that mortgage. Organize your documents. Tamara talked about your W-2s, your bank statements. She didn't mention the blood sample you're going to have to give and your left arm. There's a whole lot of stuff that banks want to see these days, the lenders want to see, to make sure that the people they're lending to are well qualified. And a lot of the things that are in place today are a direct result of what happened in 2007, 2009, which I know many of you have no idea what actually took place then, but the financial crisis, the Great Recession, all that, many things that are in place today that make it a lot harder to qualify for loans than it was back then are a direct result of what happened back then. So your documentation is key. Next step is you want to lean on your professionals. Can't say this enough. These are people who do this every day. Like we used to say, we do this for bread and meat. If we don't make it, if we don't get it, we don't eat. So you want someone who is in this, they have skin in the game. They're not doing this as a side gig or a side hustle. You know, not to say that you can't, not to say that there aren't professionals that do real estate part-time, but for the most part, you really want someone that's going to be in the market, knows the market, has their pulse, their finger on the pulse of the market every minute, because things are changing so fast. Next, have the loan types and terms. You heard Tamara talk about a couple of loan types, the FHA being one of the most popular, and conventional. There's also VA loans, the Veterans Administration. So this is a loan that's available for any military active duty or veteran. That the main benefit of the VA loan is that it's 100% financed. There's no down payment for a VA loan. There's also what's known as a USDA loan. If you want looking to buy property in a rural area, this is also 100% financed loan. There's all types of programs and different things. She mentioned also the bank loan, bank statement loans generally for entrepreneurs and self-employed individuals. So you have to find a trusted loan officer, mortgage company, and generally your realtor is going to lead you to those people. Then you get pre-approved. So working with the lender, determine what you can afford and get pre-approved so you can begin the home search. You know, this has always been important, but in today's fast-paced competitive market, it's even more important than ever, because some sellers, not only will they not look at an offer if it doesn't, it's not accompanied by a pre-approval letter. Some of them won't even allow you to look at the property. They won't allow you to schedule an appointment to see the property without a pre-approval letter, because, you know, frankly, they just don't want people looky-loos coming through their property and that, you know, have no serious intent of purchasing. So getting a pre-approval is very vital. So that's about it for what I have tonight. Appreciate again y'all having me on, and ready for some questions.
No problem. We did get one question, but I want to make sure that we say that for the Q&A section, which will happen directly after our third presenter's presentation. So Ephraim, thank you one more time. We'll bring you back around the 7:50 mark, okay?
All right, sounds good.
All right, sounds good. No problem. All right, so for our final, but not last but not least, rather, we have Mr. Kenneth Swift II. Kenneth Swift serves as a wealth manager and provides financial services to professionals and business owners through a comprehensive strategy to help them grow and protect their wealth. Kenneth's goal is to provide individuals and business owners with comprehensive retirement, investment, insurance, and wealth preservation services. Through Equitable Advisors, Kenneth's programs make sure that people are having a balanced, flexible, and overall holistic approach to long-term financial growth. So without further ado, I do want to hand it over to Kenneth. You can take it away, brother.
Thanks, Derek. All right, I'm going to share my screen with you guys so you can see the PowerPoint. And these are just talking points. Just keep in mind, this is not advice or financial advice for anyone on this call, but talking points regarding finances and financial tips when purchasing or looking to purchase a home. I have my QR code here like Ephraim, and if you use the code, you can actually get to my website from there. And the code will be on each page. So let's get started. All right, so before you buy your home, the first thing to do is to make sure that you determine your budget. Budget is very important. And when we say budget, we're looking at your monthly budget, what you can afford per month. A rule of thumb is to not spend more than 28% on your principal, interest, taxes, and insurance. So if you can stay below that threshold, you'll put yourself in a great position when purchasing a home and making sure that you can maintain those payments. Second thing, we've all said this, maintaining an acceptable credit score. Ephraim and Tamara said this, and this is very important. Like they said before, the higher your score, the better. Your score can go as high as 850 and as low as 300. Experience states that an acceptable range or fair range starts at 580, like Tamara mentioned earlier. And so if you can get your score as high as possible, that'll be great. Now, how do you do that? First is to maintain payment history, acceptable payment history. So making sure you pay everything on time, no late payments. Another thing is making sure that you have your debt to acceptable or available credit ratio low. So if you have $10,000 of debt or credit card debt, hopefully you don't have a $12,000 available limit. Why? Well, 10 over 12 is not over 6. So you're paying, or you have about 80% of your available credit in debt, and that is not good. You hope to have as much as 20 to 30% of your credit available as debt. If you can be below that, that's even better. Hopefully you have no debt, but if you do have debt, hopefully you can get that below 30% so that you can get a higher credit score. Another one would be the number of accounts you have open and your credit length. So if you can keep your credit score as high as possible, Tamara and Ephraim will be very happy with helping you look for a home. Organized financial documents, very important. So I'm not going to go about this or go over this again, but what I will mention is looking at your retirement accounts. So retirement accounts can be a great source of income or down payment if you're looking at a home, whether that's your employer-sponsored plan like a 401k or 457b or 403b, or whether it's just your traditional IRAs or Roth IRAs. You can use some of these accounts if your employer allows to take from these accounts either as a loan or as a deduction or withdrawal for your qualified home purchase. So if you can use these accounts to help, make sure that you look at those options. Not saying that you have to, but the options are there for you. Fourth is to make sure you have a sufficient down payment. If FHA loans allow for 3.5% of a down payment, so you have a lower threshold, but you will still have to pay the PMI. And so to avoid PMI or private mortgage insurance, you want to get your equity with home within 20%. So if you get it to 20%, you'll be looking in great shape. At 22%, typically it is taken away. So if you want to avoid the PMI, getting as much of a down payment as possible early on is great and what you need to do. Fifth, Ephraim said this, compare your loan lenders. So different lenders will provide different loan rates. Over here, you may get a loan for 3.5. Over here, you may get it for 2.85. So making sure that you shop around for the best rates before you begin the process will help you on greatly. All right, so now we're in the home buying process. What do you do or not do? Well, it's great to minimize account openings. Do not open up an account or go and put more debt on your credit cards because they can rerun your credit later. So that will not help you, and you want to keep that to a minimum. Next, Ephraim mentioned this, get a home inspection. This can save you thousands of dollars later. A lot of times, people add on to homes and they do not go through the right process for getting it approved. So if you get a home inspection, you can save yourself in the long run. Third, prepare for closing costs. You will most likely have to pay the closing costs. The sellers are not going to pay it, so it's your job to pay the closing costs. Closing costs can be between 2 to 5% of whatever the mortgage loan is. So you want to make sure that you have money set aside to pay for these things. And fourth, keep the status quo. You don't want to change too much while you're going through the process. Any little thing can provide a hiccup or could allow the lender to rerun different credits or just look at something again that's not necessary. So if you can just keep the status quo, if you cannot look at opening up accounts on just maintain on what you're doing, that'll help you in the long run. Now you've bought the house and what to do after? Well, one thing to do is to make sure that you update your estate planning documents. These would be your wills or your trusts to make sure that you include this property that you just purchased within those estate documents. Next, obtain life insurance. A lot of times people think their homeowner's insurance or mortgage insurance covers a life insurance, but it doesn't. Your homeowner's insurance covers if you were to be someone to blame you for something happening on your property, or if you had some damage to your property. But if one of the homeowners passes away, where would you get money to pay for this new beautiful home that you just bought? So obtaining life is shown to be critical to make sure that you can keep your same standard of living. Third will be maintaining your emergency account savings. A lot of times people will get a home and they blow through their savings, which is not the thing to do, because guess who owns the home? You own the home. So if anything happens to the home, you're responsible for it. So it's very important to make sure that you have money set aside for these emergencies that will come up. We don't know when they will come up, but they will come up eventually. So making sure that you prepare for that will be helpful. Next, review your retirement plan. So a lot of times people take money from the retirement plans as loans, but they forget to pay them back. Well, if you do forget to pay your loans back from your retirement plans, what will happen is you will have to then declare that loan that you defaulted on as income for that year. Depending on how much you've taken out, that can actually shoot you up to the next tax bracket, and you'll have a real bad headache the next year when you file for taxes. So making sure you review those retirement plans to make sure that you are keeping up with the loan payments, but also a lot of times people stop paying into their retirement plans. So making sure that you restart those contributions as soon as possible. Next is to pay off your home early if desired. You can make an extra payment a year. And if you're on a 30-year loan, conventional loan, you'll pay that off in 24 years. Just one extra payment a year can help you pay a 30-year loan 6 years faster. Not everyone's looking to pay off the home. Some are looking to use that as leverage and to invest the money in other properties or different things like that. But if you are looking to pay off the home early, one extra payment a year will definitely help. All right, so here's the thing. You want to do your research. It's very important to find professionals that you trust. Word of mouth is great, referrals are great, but just make sure that you ask all the questions that you need to ask because this is your home and you're the one who's going to be living in it. And good luck. That's all I have for you guys.
Thank you, Kenneth. I appreciate that. I'm actually going to take this time to actually welcome all of our, let's say, panelists or presenters back. And we're going to dive into Q&A. One quick thing that I do want to say is if you've submitted any questions into the chat, I ask that you redirect those into the Q&A section, just so we can make sure that we're seeing those as we're going through these live. So Ephraim, Tamara, Kenneth, join us back here. Turn your cameras on so that lovely people can see you. And I'm actually going to gear this first question towards, let's see, Tamara. So someone asked this question, and I think Kenneth just kind of alluded to it, is it seems that your realtor kind of points you in the right direction of, the right lenders, the right, people to get in contact with. But what is your advice on finding the right realtor? Like, how do you find that right person who actually has your best interest at heart and aren't serving in a, let's say, a predatory manner? Does that make sense?
Yes. So a couple things I would always recommend to doing your research and reaching out to like a couple different realtors. Also looking up your realtors online as well, checking out Google reviews to see who you're going to hire to work with. That's going to be very critical and important in the process and in the step. And take your time as well. Have a 15 to 20-minute conversation with each individual just to kind of determine if that's someone that's going to fit, for what you're looking to do, whether it's to purchase a first home or a second time home purchase as well. So I always, no matter what, I always recommend clients, if I'm not a good fit for you, just make sure that you do your research to see who would be a good fit for you and what you're looking for. But also ensure too, like I said, the Google reviews are important, looking people up, looking at the social media just to kind of understand if they're actually, working full time, so that they can be a good resource to you before you even hire that individual. Because I know too, whenever you're purchasing, I know when I purchased my first home, and I'll just give a quick example, I used a family friend. And unfortunately, back then, I didn't necessarily know or did my research about that individual. So kind of in hindsight, I would have done more research because I felt that I was going through the process and I wasn't being educated along the way. So that research is important. I know Ephraim, I think Ephraim had mentioned it, and Kenneth as well.
Love it. Thank you. Thank you. On to the next question here. In 2020, I'm going to actually direct this at Ephraim. In 2020, we know that the country shut down, right, due to COVID-19, and homeowners and tenants couldn't either pay their mortgages or their rent. And even 2008, you said 2007, 8, 9, you mentioned there was this housing crash and recession. What are ways that, let's say, homeowners can protect themselves in the future if the market actually repeats itself?
Some of the biggest ways you could protect yourself in any downturn or, financial crisis is, one, not overextending yourself. Kenneth talked about, keeping your debt low and not adding to your debt with credit cards and things of that nature. That's a huge part of it. Living within your means is huge, because now I know many of you on the call are a lot younger than myself and don't really remember. I mean, Tamara, it sounds like she bought her house like right as the financial crisis was taking place in 2008 or so. But that was I can't even explain to you how huge that was. But the biggest problem that was going on back then was people were so overextended and over leveraged that when the dominoes started to fall, they took everything down with them. There were I knew people personally who had at one time Tamara, this sounds crazy right now, but I know a person who had 4 new construction loans. He was building 4 new homes at one time. He's not a builder. He was actually a college professor. He was acting as his own contractor, had no experience. And he was able to think about that now, it's insane to even consider it. But not being leveraged, not being in so much debt, living within your means, and having an emergency fund, having some backup funds. If you have a stable income, you have a good job, that's great. There's always something that could possibly happen, take place that, God forbid, you won't have that job, and, you'll need to have other sources. So having an emergency fund and living within your means, those are the 2 biggest things I can think of off the top of my head, just to protect yourself.
No problem. Thank you for that. I'm actually going to switch to a live question that we have. And Kenneth, I'll actually pitch this. Well, actually, anyone can answer, because I actually have one specific for Kenneth. In our community, we've always heard that credit unions are better than your traditional banks or lenders. How much truth is behind that statement? That credit lenders are maybe better, or credit unions, are better than like bank lenders?
Tamara?
I didn't want to jump in, but I will. So with the credit unions, what I have seen technically, and it just depends on the relationship that you do have with the credit unions. Typically, every profile, every client is different. However, I've noticed that there are some advantages with going with a credit union versus going with an actual, with a bank for your mortgage. Sometimes you have credit unions that'll offer, better interest rates depending on your credit scores. And they're a little bit more flexible. So it all just kind of depends. That's why I always recommend, if someone does get pre-approved with a credit union, I also would recommend to check out a couple different lender options as well, and kind of look at, the actual actual profile to see if it fits for what you're looking to do, if going with a credit union is more so in your favor. But I have noticed, as I mentioned before, that going with a credit union has been more so in the positive favor for a lot of clients. Versus
I'll add a little bit to that also. In my experience, credit unions sometimes will give you a better interest rate sometimes. And like Tamara said, it's on a case-by-case basis. But for the most part, credit unions and banks, in my mind, are in the same category. And then you have mortgage companies. These are companies that only do mortgages. So that's what they specialize in. So it's like the difference between going to a brain surgeon and a general practitioner, a family doctor. So one specializes in only doing that one thing. So they're going to be a lot more efficient at it. They're going to have a lot more skill in that specific area, as opposed to one that has this kind of one-stop shop that does some of everything. They may be able to give you some benefit in some way, but then other ways, in my experience, they're going to fall short. And usually it's in the speed, the efficiency, and the communication. So I always have a team of lenders that I work with personally, and I give my buyers the option to talk to several and go say always got, and just make sure you're getting the best bang for your buck.
There you go. We're in the world of Zone people. Thank you, Ephraim, for that. We'll actually move on to the next question here, which I think a lot of people have kind of touched on in this Q&A section. But there was one that was submitted in advance that I want to read. So, Kenneth, this will be directed towards you, since you are our finance guy on the call, and we understand that these are talking points and not advice. So according to data from the National Center of Education Statistics, we know that our community, African-American college graduates, owe on average about $25,000 more in student loan debt than our white counterparts. 4 years after graduation, 48% of Black students owe on average about 13% more than they borrowed and face about 30% higher loan payments of about, let's say, $350 or more. So a lot of people in the audience want to know, how exactly does student loan debt affect them in the home buying process? And then what tools are available to help combat this issue?
So student loan debt definitely affects you, but not the way you think. It's not about usually how much you have student loan debt, but about the monthly payments and how that's affected, or how that is the relationship, the ratio to your income for that month. So if your student loan debt is, if your monthly payments are higher and it's gobbling up more of your income for that month, that's not going to look good. So one way to combat that is just to make sure you make more money, but also make sure that you are being reliable in paying those student loans off, or making the payments each month. That does help and go a long way. One thing that you can do to start to lower your overall payment is start to put more money to the student loans that have the higher interest rate. So definitely make your monthly payment, but when you're looking to put more money into your student loan, make sure that goes to the student loan with a higher payment, which will actually help you pay off that loan faster.
Got it. And I have one follow-up just on that. Someone asks, what if your student loans are deferred because you're doing a master's degree? Is it still including your debt to equity ratio?
That'd be a good question for the professionals. More the realtor.
Yeah, either way.
From
Tamara.
Yeah, when your loans are deferred, generally speaking, the lender will use a formula to determine, how they do include it. Basically, yes, the answer to that question is yes, they do include it in your debt to income ratio. And with a conventional loan, and now actually FHA is also doing this, they'll take half a percent of the total amount of your student loan to calculate the payment that they were going to use to put into debt to income ratio. So if you owe, just to make the numbers easy, $100,000, 0.5% is about $500 is what they put on your debt to income ratio.
And just to add to that 0.5% was recently, was it this year or closer to the end of last year that they made that adjustment? So it's more so in our favor if you do in fact have student loan debt, that it's a positive, because instead of taking the actual 1%, what they were taking before, it's 0.5%. So essentially you can get pre-qualified for more, when it comes to your buying power, if they're using that 0.5%, since they're now using that 0.5% versus 1%.
Yeah, did you have something you want to add, or are you pretty good?
Well, I was gonna get back, if you can just also remember your credit scores really help with this. So, if you want to just make sure you check in with the credit agencies, Experian, TransUnion, Equifax, just to make sure that there are no blemishes on your record that weren't your fault. That'll be really good as well.
Love it. Okay, cool. We have about 2 more here that I want to try to get to before we pass the 8 o'clock mark. And if you guys can stay on for a couple minutes after, cool. If not, I understand and respect your time. Tamara, I'm gonna gear this towards you, but everyone can answer. I know you've mentioned early on in your, let's say, postgraduate days or even college, like you had the opportunity to buy a lot of houses, right, in the different cities that you lived in, and now they're investment properties. And so one of our guests wanted to know, do you have any tips, right, when it comes to purchasing that second property as an investment property? What exactly do you think is the best route? Is it auction? Is it foreclosure? Like, what's the best approach?
Okay, well, that's kind of a twofold question. I think you have to figure out the strategy that works for you and what you're trying to do or to accomplish. That's the first thing. The second part about investing is really to understand your budget, how much you're looking to spend, and what you're looking to do. So there's individuals that decide to invest for the purpose of flipping. That's an option, right? But it's a whole different ballgame when you get into the investment aspect flipping, because then you also have to navigate through renovations, what that looks like, the cost for that. We actually just recently closed on a property that'll be an Airbnb by January. But kind of going through that full process with the whole renovation aspect of it, there's like a ton of expenses that we didn't even calculate for prior to kind of going into the process overall. So I would just say that just understand like what you're trying to do and how to do it. Okay, that's the first thing. The other thing I would say is do your research. If you're looking to do, look into foreclosures or auction, properties, there's still a lot of stuff that you have to do behind the scenes to kind of educate yourself before you decide that I want to step out into that realm or into that arena. I meet a lot of people and individuals that say, hey, I want to invest in real estate. I want to do foreclosures or auctions, but have no clue about where to start. So the first thing is to read, to understand before you even get into that, into that aspect of the investment side. A lot of the investments that I have done personally are typically resale homes, just buying them, and also holding and having property management companies to come in and to manage the properties for me. That's how I have chosen to build my portfolio, just doing it the easy, it's not the easy way, but it's the way that I've chosen to do it within the past several years to build our portfolio. So we basically buy, hold, and then have renters to go in and rent, and then build equity through the renters.
Add a little bit to that.
All right, brother. Yeah, no problem.
Okay. This is right up my alley, because and my tagline is I help families build wealth through home ownership, real estate investing, and debt conversion, basically. So the thing that I've been preaching to my children is your first property that you buy can be an investment property. And not that you're going to specifically buy for the purpose of flipping or anything like that, because that is an involved process, and you really need to know what you're doing if you're going to be flipping. I tell anybody, just like Tamara said, you got to educate yourself, and you really need to be you really need to get with some people that you can trust, that are professionals, that know what they're doing, that connect you with other people that are doing this for, not for a living, but who are experienced. But back to what the main point was, I was saying about your first property being an investment. You can buy a multifamily property just as easy or easier then you can buy a single family property as your first, as a first time buyer. So what I mean by that is if I have a duplex, say 2 units, and that duplex is, let's say a single family home, maybe 200,000, that duplex, I can get a duplex for about the same or maybe a little bit more. I can still, if I'm going to live in that property, I can qualify for the first time buyers down payments of 3% or 3.5%. And since I'm living in it, it's like it's not seen as an investment property, which typically takes a larger down payment, right? So that's one advantage. Second advantage, obviously, if you have 2 units, you can live in one, you rent the other one out. The other one is paying your rent. This is something I've been preaching to my kids since they could understand. And, you know, hopefully they'll take the advice, but you can do that with up to a 4 unit building. So you can start, you can Airbnb. That's a thing that's an opportunity that didn't exist a few years ago, but now it's huge. You have a 2 or 3 or 4 unit building, you living in 1 unit and you're renting out or Airbnb out the rest of your units. Those units are not only paying for you to live there, but they're giving you income as well. Not only that, if you buy a multi-unit property, the lenders will use the potential income of those units that you're going to rent out to qualify you. So if you can only qualify for, let's say, 200,000 with your W-2 income, the potential income that you're going to gain from renting those other units out will be added to your income and allow you to be qualified for more money than you would just on a single family property. Then from there, it's very easy to then go and buy other multiple unit properties or single family if you want. You know, you can go buy your dream home once you've got 2 or 3 or 4 investment properties that are producing cash flow. So that's something I try to get across to all young buyers. The sooner you start, the better off you be. Tamara's done it, I mean, to perfection. She, you know, bought houses right out of school. And when she moved, she didn't sell them. She kept it. And now, you know, she's sitting pretty. So unfortunately, I didn't have that knowledge, you know, starting out, but I'm trying to get it to all of my younger, you know, my kids, number one, and any other younger person that's willing to listen.
Love it. I love it. Let's see. I got one last question before we wrap up. And before we do, I actually do want to say that we've gotten a ton of questions, and I think I can speak on the behalf of Shari as well, that this can't be the only installment of this home buying or wealth building process that we do. I see the engagement is mighty high. So thank you all for volunteering to do this. But my last question is kind of look ahead, right? And so with the transfer of wealth already underway and the rise of cryptocurrency, you know, we see this virtual real estate on the rise. Any one of you, where do you see, you know, this real estate market going, let's say within the next 5, 10 years? You had to look into a crystal ball. Just your opinion.
Whew. I guess I can jump in first. Not everybody speak all at once. Man, you know, I for one am just learning a lot about cryptocurrency, and I'm in some rooms that are heavy into that, and you know, learning about the metaverse and NFTs and all these new technologies that are coming out. Everything is having a huge impact already. Just the wealth transfer in particular, there's so much more access that wasn't there, you know, even a few 10, 15 years ago. So what I'm seeing is people starting a lot younger. They're building wealth through these different avenues, whether it be through crypto investing. You know, I see a lot of young kids, literally teenagers, learning how to trade crypto, how to trade stocks, even how to invest in NFTs and all these type of things. And they're starting their wealth building journey a whole lot earlier than traditionally speaking. And they're doing it with way more avenues than traditionally that we know of, real estate, you know, being the main one, stocks and so on and so forth. But I just see, you know, these kids starting so young and building that wealth and putting it into so many different avenues. It's just, it's amazing. It's mind blowing. And I have really no idea where we're going to be in 10 years from now.
All right. Well, what I do want to do, I want to wrap us. If we didn't have any other comments on that question, looking at the faces, saying none. I do want to say thank you all for participating and serving as our wonderful guest speakers on tonight. Thank you for all of you that attended tonight's session. I do want to stress for a little bit, I'm going to hand it over to Shari to speak on the behalf of the Black Alumni Network, but the importance of staying involved with your Young Alumni Networks, your Black Alumni Networks, and overall your Alumni Association post-graduation. If you look at the information that's been dropped, this is your tribe. This is your board of directors. These are your people that you can call on and ask questions. This is the network where you're home away from home. Maybe the person that just graduated 1 year doesn't have the answer, but maybe someone who graduated 10 years, 20 years, 5 years does. And events like these, that my network, Shari's network, and the other affinity networks that we have at large are doing just that. Not only providing a home for you and that you're in your new city, your new occupation, but also providing you with the resources to be successful post-graduation. So stay involved with the Young Alumni Network. We're at FSU, Young Alumni on Instagram. Follow us. We're always hosting great information and events in local cities near you. Shari, do you want to plug the Black Alumni Network?
Of course, it is at FSU BA. Follow us on Facebook, Instagram, as well as join our listserv to see where we are. We try to do some annual events regionally in respective cities, but then also travel around, you know, if there's some important games. I know we will be planning a kickoff in New Orleans for the season, Labor Day weekend. So hope to see everyone there.
There you go. And last but not least, we're also going to ask you to join. If you're a young alumni, meaning you graduated within the last 10 years, you get a special discount. Hit me up afterwards. I think it's between $10 to $15 off of your household. So not just you, but if you have a wife, you got kids, all of you are members, and get, you know, some good, let's say, discounts, perks, etc., benefits. But this call will be housed on the FSU Alumni Association's YouTube and other other platforms such as their website. At the beginning of the new year, we'll make sure that it's emailed out to all of the participants. And please, 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 you see Ephraim has his tag there. Kenneth has provided his tag. Tamara has provided her company. Please reach out to these individuals. They have a wealth of knowledge. Don't let the journey stop here. So until next time, thank you. Be blessed. Happy holidays. And as always, go Noles.
Have a good evening, y'all.